Welcome. It's all about the money, isn't it? What role does the financial sector play when it comes to the climate transition? And you come from very different angles, the three of you. So, Richard, if you just start to explain.
Very happy to explain Handelsbanken in the UK and where we come at this question around sustainability. So we come at it very much from the point of view of a relationship bank. We're focused squarely on the UK domestic market through our 150 or so branches across Scotland, England and Wales. And we're providing the sort of private banking style and wealth management services on the individual side of things. And then we're catering for the gamut, if you like, the spectrum of corporate customers, so very much the larger end, but then a great number of smaller businesses and medium-sized businesses. And particularly, I would say, so probably most of my examples that come across will be from the real estate sectors, where we have a particular footprint.
Chuka?
First of all, thanks very much for asking us to do this session, and thank you for everyone for hanging around to the end to listen to us in the last spot. Brilliant to be here. So JP Morgan is, we're known for being, I suppose, a big US investment bank, and we are, I suppose, the biggest bank by market cap in the world. But actually, in terms of our footprint here in Europe, and I don't care about Brexit, we're still in Europe here in the UK as far as I'm concerned. But we are one of the 20 biggest banking institutions supervised by the ECB. And across all of our different lines of business, this issue is an enormous issue for our clients and our customers. And so, you know, I suppose, as I said, we're known for our wholesale banking practice, and we have, obviously, our corporate and investment bank. But we also have a growing UK retail bank, Chase UK here. We have a private bank and also JP Morgan Asset Management, and we also have a commercial bank. So across all our lines of business, this is a very big issue, both in terms of what our clients are looking for, but also what we're doing ourselves as a bank to decarbonize our financing portfolio.
And Sophie, where do you come from in this?
So hopefully if you're Swedish in the room, you know who EQT is, and if you're British, you possibly don't, would be my first assumption. So EQT is a purpose-driven investment organisation. Our purpose is to future-proof companies and make a positive impact, and that is very deeply felt in the organisation. We come from a history or a legacy, or a Nordic legacy, but we're now increasingly global. We are driving a major acquisition of BPA Asia, and at that point we'll be one of the top 5 largest private equity firms in the world. So in terms of the key ways that we really think about this, we've got 2 main investment classes: real assets, both infrastructure businesses and direct real estate investment. And then we've got private capital, which is the bit I sit in, which is invested in everything from small venture startups through to large, mature, cash-generating businesses. You just heard from one of our portfolio companies, I'm right. And another one that was mentioned earlier, Vinted, another one of the companies we're invested in. So we are, I suppose, actively committed and driving green transition through a number of our investments.
Yep. Chuka, John Kerry said the other day at the World Economic Forum that the climate change is the largest economic opportunity and transformation since the Industrial Revolution. But he also pointed out that the world needs to act on climate change now. What's your comment on that?
So I'm glad he said what he said, because I think too often this journey that we need to go on is painted as a burden, a problem, and a sacrifice. But I absolutely do think, and we think it's an enormous opportunity. If you look at the cost of the transition, I mean, there are various estimates that have been published on that, but generally speaking, they tend to fall between $5 and $7 trillion a year, every year, between now and 2050. And so that's a lot of money that will need to be raised, but also, if you think about how it is deployed, you know, first of all, it means hopefully that we will be able to bequeath a planet to future generations, to my children, that they can live on. But actually the innovation and the change in the way that we live that it entails, hopefully, and you had a lot of that on the panel session before, will enable us to live in a more healthy, sustainable and efficient manner. But the problem at the moment is that we're just not getting, I mean, you asked at the top of the conversation, the role of finance here. We aren't, when you take that 5 to 7 trillion a year that needs to be invested, we are nowhere near hitting that at the moment. And if you look just here in Europe, for example, I think the European Capital Markets Institute was saying that it was going to cost, just this decade, it was going to cost Europe 11.2 trillion euros to transition sufficiently by the end of this decade. Now, if you take the COVID relief package, which is basically, mostly being spent now, and the Green New Deal money that the EU has put up, that's like 1.8 trillion euros. So there's this enormous delta between what we need and what is going in. And frankly, that is where all of our different institutions come into play, because without our institutions doing what we do best, you're not going to be able to plug the gap. But that said, I mean, the public sector has got a really big role to play here too. It can't be left to financial and capital markets to sort it all out.
And for JP Morgan, how is this a big opportunity?
Well, we have committed to finance or facilitate $2.5 trillion towards delivering against the UN Sustainable Development Goals. And a trillion of that is for climate. Yeah, I mean, it's the biggest commitment of any bank in the world. And that's just kind of like a baseline commitment for us as we start on this journey. So that, and how will we use that? Well, so many of our clients need to raise capital to transition. And also, if you look at the kind of companies that are going to be to this, what I call fifth economic revolution, what Amazon, Facebook, Uber, and so on were to the fourth industrial revolution, the tech revolution, they are not going to be able to go on and become the size of a Google, Amazon, etc., unless they get are able to raise the money, which is very challenging. Going to the point that I think Sam was making on the earlier panel about, he was right to say that getting investment to some of these projects because of their risk profile is quite challenging. And so we have a role to play in all of that in what we do. And I'm not, let me not be disingenuous. We also, as a sector, but as a bank in particular, we also have to decarbonize our financing portfolio, which is, it's an enormous task, put it like that.
And Richard, are you working at Handelsbanken? Are you working almost at the same methods, or?
To some extent, yes. I mean, there are peculiarities about Handelsbanken's way of working that perhaps some in the room of Swedish descent will know anyway. So we work in a very decentralized way in the organization. That makes us locally embedded with a huge amount of autonomy and accountability for our branch teams. And we think that this has real applicability in the net zero transition, working with our customers. So, what we have there, really strong relationships build up over many years by teams who, it's their hometown, so they care about acting responsibly there, but they also have the decision-making authority and, as I say, accountability to be able to take that forward. So we kind of come from the bottom up there, and what we're trying to do is build the knowledge bar for our branch teams, of course, so that they're really able to have that engagement with their customers and then take them through a full journey from, in many cases, knowing very little about climate change from their business perspective, right through to having a plan, setting off on that journey, and of course, getting the finance that they need to be able to execute on that as well. So as historically, Handelsbanken hasn't set these sort of big ticket goals. We completely respect that other organizations do. But what we have done is to say, we as an organization, including these Scope 3 emissions that we're all becoming familiar with talking about now, we will drive to get to net zero by 2040 at the latest. And in order to do that, we've set ourselves some stretching targets on how much of our loan book needs to be green and or sustainably linked by the middle of this the middle of this decade now.
So does it matter if a one of your customers makes a green choice, do they get a better finance deal from you?
Yeah, and that's not particularly unusual to Handelsbanken. I think it's really interesting that there is this, this so-called green premium in the marketplace. It's been there a while. It waxes, it wanes, but it's there. And so banks need to decide for themselves, but they need to decide how best to use that differential, if you like, to leverage the most impact through their customer base. So as things have started, if we think about the retail space, SMEs and individual banking customers, it's tended to start with, let's identify choices that customers are making or have made that are demonstrably green. You can put a stamp on them, and when they do that, let's give them a pricing discount. But I think, if we think, for instance, that 4 out of the 5 homes that are in the UK today will be the homes in 2050, it's the transition challenge, taking those brown assets to be green assets over these decades, which is the real heavy lifting. So a lot of that incentivization needs to go into the renovation side of things. I think Sam mentioned earlier, 240,000 properties that need to be greened effectively per year to get anywhere near that. Yeah.
Sophie, you have 10 billion invested in acceleration solutions. Tell us how you help them to be more sustainable.
So yeah, we've invested in our about 10 billion, or just actually over now, in what we would call our climate and nature track record. So that's solutions which are either new or existing. Some might be small, some might be very large in terms of scaling the market. But it also includes some major transformation business cases where, so I'll give you an example, First Student and First Transit, think of them as the US yellow buses, serving school children. That part of that investment thesis was about the electrification of that bus fleet. So that I suppose, is a fairly fundamental way that we've viewed that investment when we've invested into that organisation to drive that transformation. But we also, I've mentioned a couple of our investments today, but another example might well be Formo. It's precision-based fermentation of microorganisms to create delicious cheese. And for those of you that have vegan cheese before, it's horrible. I'm sorry, it is. But Formo is a very good substitute. Formo is a wonderful substitute. Their mozzarella is beautiful. So I think it's about, for us, it's about finding the kind of sticky points in the market where there really needs to be a transition, in that case, to dairy-based cheese, but also other really sort of amazing transformation opportunities, particularly in existing business models. Another example for us being a pest control business, the first investment in EQT Future, our impact-driven longer hold strategy, where we're effectively scaling a biocide-free solution to pest control, which could be market transformational. So I think, as you can tell, what we get excited about is the individual portfolio companies. That's the joy of working in private equity, and particularly in a buyout strategy, is that ability to really get closely involved with the actual individual businesses and the way that they're transforming the markets. But maybe the one other thing to say is that that's our kind of, I suppose, dedicated amount, and it will scale demonstrably. But we also, with all of our portfolio companies from growth equity up, we were the first private markets firm to commit to science-based targets last year. And we are driving 40 portfolio companies through their science-based target first wave adoption this year. So what we're really thinking about there is we won't own those businesses forever. So how do we future-proof those businesses when we exit them, a typical 4 to 5 year private equity hold period, so that that business is effectively owning its science-based target, and that goes out to the market at the exit process, so as part of our equity exit. So we're pulling quite a few different levers in different fund strategies in different parts of our business to make sure we're driving that climate transformation.
I guess even though you're such a large bank, you work in the same way, partly. What can you do to help your clients to make the right decisions?
Well, I'm on the other side of the fence to Sophie, basically. So
yeah, but you still help your clients.
Yes, absolutely. So, I mean, although I oversee JP Morgan's ESG profile here in the Middle East and Africa, that is actually my secondary role. My primary role is as an investment banker. So I lead our ESG investment banking team. And we do two things for our clients. One is we advise them on their overall ESG strategy. So what is it that they should be doing? And we do that with an investor lens. So what are the likes of, EQT or in the public market? What are those investors expecting of you? And we also will handle the ESG aspects of capital markets and M&A transactions. Quietly, under the surface, you are seeing quite a change in terms of the way that investment banking is operating. So on a lot of these big deals and transactions, there is a dedicated ESG and sustainability workstream. There wasn't, say, 18 to 24 months ago, but that is increasingly changing. And then we help those companies, once they've got the strategies right, they've made sure that they've covered off the issues appropriately through the transaction processes, then we help them raise the capital, be it whether they're going to the equity market or the debt market. So on the debt side, we are the lead ESG bond book runner in the world at JP Morgan. And a lot of companies like to issue ESG labeled debt, partly because you get a bit of a benefit in terms of a greenium on the price you pay for the capital. But also a lot of people actually use it to, if you like, promote their sustainability credentials. So that's just to give you kind of a flavour of what we do. And we also try and make sure that we are supporting, a lot of our existing clients, some of the biggest, companies in carbon emitting sectors are all obviously reconfiguring their businesses over time to get to net zero. But you've then, as I said earlier, you've got these new green economy companies who are going to be vital for the transition because they're the ones who create, the so far kind of invented technologies which will get us to net zero. So we've got the technologies at the moment to get us on the trajectory to where we need to be up to 2030, but that kind of period from 2030 to 2050, we don't actually have a lot of the technology which will get us to the finish line. And that's where these new companies, actually a lot of them are in the Nordics, really will come into play and have a really vital role to play for our planet's future, frankly.
Do you have any concrete example?
I probably wouldn't want to refer to any in particular, but I think one that has been well publicised just because of client confidentiality is Climeworks, which is actually a Swiss-based carbon removal company, which is probably the first one that has done carbon removal in a commercially viable way. And we were just led the equity private placement for them, which raised a substantial amount of money for them to take that company to the next level.